Welcome back to the Pro Ticker Podcast, your Tuesday morning edition covering major financial magazine headlines, everyone. Today we're diving deep into the forces that shaped the markets this year in 2024. And we've got a stack of insightful articles from the Wall Street Journal, Barron's, and Bloomberg. And let me tell you, it's been a year for the books.
It really has. And what's fascinating is that we've seen these seemingly disparate events converging in ways that few could have predicted.
Yeah, the Wall Street Journal has a piece on the AI boom that really highlights this. They point out that NVIDIA's market cap has now blown past $3 trillion, with Broadcom hot on its heels at $1 trillion. You know, it's almost mind-boggling when you think about it. These companies are now worth more than the entire economies of many countries.
Yeah, it does make you wonder about the potential long-term implications, right? Are we witnessing the birth of a tech bubble 2.0, or is the sustainable growth driven by genuine innovation? And what about the ripple effects on other industries as AI becomes more ubiquitous?
It's definitely a question worth pondering. And while we're on the topic of unlikely winners, the Wall Street Journal also mentions this Japanese cable company, Fujikura, that quietly became a top performer on the Nikkei Dale.
Ah, yes. The unsung hero of the AI revolution. Their cables are essential for data centers, which are the backbone of AI processing. It's a reminder that even in a world dominated by software and algorithms, the physical infrastructure still matters.
Absolutely. And speaking of things that have defied expectations, Bitcoin has had quite the roller coaster ride, according to both the Wall Street Journal and Barron's.
It has indeed. The SEC's decision back in January to finally approve Bitcoin ETFs was a real game changer. Remember how many people were skeptical about crypto going mainstream? Well, that move seemed to legitimize Bitcoin in the eyes of institutional investors, paving the way for what happened later in the year.
You're talking about the Trump effect, right? Barron's has a great piece on how Trump's re-election in November sent the crypto market into a frenzy. Despite his past skepticism, his promises of lighter regulation and a national Bitcoin reserve, talk about a plot twist, sent Bitcoin soaring to a record high of $188,000 just this month.
It just goes to show how political events can create massive shockwaves in the financial world.
Absolutely. Speaking of shockwaves, the Wall Street Journal calls the sudden unwinding of the yen carry trade in August the big blow-up of the year. It triggered a massive sell-off in the Nikkei, marking its worst day since 1987. Could you walk us through what happened there? I'm sure some of our listeners might not be familiar with the intricacies of carry trades.
Certainly. Imagine borrowing money in a currency with low interest rates like the Japanese yen, and then investing that money in a higher yielding asset in another currency like U.S. stocks. That, in a nutshell, is a carry trade. You're essentially profiting from the difference in interest rates. The problem arises when the borrowed currency suddenly strengthens, as the yen did in August. It creates this scramble to repay those loans, leading to a wave of selling in the assets bought with borrowed money. In this case, Japanese stocks, hence the Nikkei's plunge.
So are we saying that global markets are essentially one giant house of cards vulnerable to these unexpected shocks?
Well, it's not quite that simple. While the yen carry trade unraveling was dramatic, it's important to remember that these types of events are often short-lived. The underlying fundamentals of the global economy remain largely intact.
That's reassuring to hear. But what about the Trump trade and the concerns the Wall Street Journal raises about its potential impact on government bonds, especially treasuries? They note that investors are worried about the potential for Trump's policies like new tariffs to trigger inflation and hurt bond values. We've already seen a post-election sell-off in treasuries and yields hitting multi-month highs. What are your thoughts on this?
It's definitely a development worth watching closely. You see, Trump's victory has created this unusual situation where some investors are bullish on assets like Bitcoin and the dollar, the classic Trump trade, while simultaneously being wary of bonds. It's a sign of the conflicting forces at play in the market right now.
Okay, so we've got the AI boom, Bitcoin's roller coaster ride, the unwinding of the yen carry trade, and the anxieties surrounding the Trump trade and its impact on bonds. But there's another story bubbling under the surface that we need to address, the Fed's approach to interest rates.
Yes. The Wall Street Journal describes it as a cautious balancing act, which feels like an understatement. They eventually cut rates by a full percentage point, but the timing and extent of these cuts were shrouded in uncertainty, leading to bouts of market volatility.
Yeah, they mention a pretty dramatic example, the S&P 500's 3% drop right before Christmas, after the Fed hinted at smaller than expected cuts next year. Do you think this cautious approach was ultimately the right call? Or did it contribute to market anxiety? What could they have done differently?
That's a tough question. The Fed was caught between a resilient economy and inflation that proved stickier than they anticipated. They had to weigh the risks of moving too quickly against the potential consequences of falling behind the curve. I think it's too early to say definitively whether their approach was optimal. But what's clear is that their every word and action are now being scrutinized by investors amplifying market reactions.
So we've covered a lot of ground here, but our deep dive wouldn't be complete without exploring some of the less publicized stories that could have significant implications down the line. Bloomberg in particular has some fascinating pieces on these undercurrents shaping the global financial landscape. Are you ready to venture into those uncharted waters?
Absolutely. There are some intriguing developments that deserve our attention. For instance, concerns are mounting about potential market dislocations, especially in the U.S. Treasury market.
Well, that sounds ominous. Tell me more.
Well, Bloomberg has a report that delves into the challenges faced by primary dealers in the U.S. Treasury market. You see, these dealers are essentially the gatekeepers of this massive market, ensuring its smooth functioning by bidding on new debt at Treasury auctions and maintaining a healthy secondary market.
Okay, so they're crucial players in the system. What challenges are they facing?
They're being squeezed from multiple sides. The amount of outstanding Treasury debt has exploded in recent years and is projected to continue rising. This, coupled with post-financial crisis regulations, is making it increasingly difficult for dealers to fulfill their obligations with the same level of efficiency.
So are we talking about potential bottlenecks in the U.S. Treasury market, the very foundation of our financial system?
Exactly. We've already witnessed some signs of stress, particularly in the market for short-term funding. Remember back in 2019 when the Fed had to step in to stabilize the repo market? That was partly due to limitations on dealers' ability to intervene effectively.
And Bloomberg points out there have been other smaller flare-ups since then. So is this a ticking time bomb?
It's certainly a situation worth monitoring closely. Any disruption in the smooth functioning of the U.S. Treasury market could have far-reaching consequences, potentially rippling across the global financial system.
Now that's a thought that keeps you up at night. But let's shift gears and look at what's happening in other corners of the world, because Bloomberg also highlights some fascinating developments in the Hong Kong dollar.
Yes, they reported that the Hong Kong dollar has recently hit a 3.5-year high. It's quite an interesting development considering the other currency fluctuations we've discussed.
What's driving that strength?
Bloomberg points to a confluence of factors. There's a year-end liquidity squeeze, increased dividend payouts by Chinese firms listed in Hong Kong, and mainland investors showing growing interest in the city's stock market. All of these factors are boosting demand for the Hong Kong dollar.
So it seems like Hong Kong's financial markets are defying the global trend.
In a way, yes. It highlights the complex interplay between local market dynamics and global economic forces. What happens in one part of the world can have unexpected consequences elsewhere.
Speaking of unexpected consequences, let's talk about Indonesia and what Bloomberg calls their biofuel gamble. They've been trying to expand their biofuel program by increasing the volume of palm oil in their mix. Sounds like a good idea on the surface, but
But there's a catch. Palm oil prices have surged recently, which has created a funding headache for the Indonesian government. Their good intentions are clashing with economic realities.
So what does this mean for Indonesia and potentially the broader market?
Well, the higher cost of biofuel subsidies could impact Indonesian consumers and fuel retailers. It also raises questions about the long-term viability of their biofuel ambitions. And on a global scale, if Indonesia is forced to scale back their program, it could impact the demand for palm oil, which could then affect prices in other markets.
It's amazing how these seemingly isolated events can have such interconnected consequences. We've covered a lot of ground, from the AI boom to Bitcoin's wild ride, from the Fed's cautious approach to the potential pressure points in the U.S. Treasury market. It's clear that 2024 has been a year of extraordinary market activity.
It certainly has. And as we've discussed, these events have set the stage for a potentially even more dynamic and unpredictable 2025.
But before we dive into the year ahead, there's one more story we need to revisit, and it circles back to the world of crypto. Bloomberg has a piece on MicroStrategy and their unwavering faith in Bitcoin.
Yes. MicroStrategy's all-in bet on Bitcoin. Despite their share price taking a hit due to selling common stock to fund these purchases, they've continued accumulating Bitcoin throughout the year.
Their Bitcoin holdings are now worth over $41 billion. It's a bold move, to say the least. What do you make of it?
It underscores the growing conviction among some investors that Bitcoin is here to stay and will thrive, especially under a potentially more crypto-friendly Trump administration.
It seems like we've come full circle back to the influence of politics on financial markets. And this brings us to a fascinating piece from Bloomberg about the performance of the Chinese yuan. They reported that China's offshore yuan fell to its lowest level against the U.S. dollar since 2022 in thin trading. It's interesting to see how the yuan is reacting, especially given the strength we've seen in the Hong Kong dollar.
It is an interesting contrast. Despite China's economic recovery and the stimulus measures they've rolled out, the yuan has faced depreciation pressure.
Bloomberg even mentioned that the People's Bank of China might be holding off on a reserve requirement ratio cut, a move they previously hinted at to try and stabilize the yuan.
It appears they're navigating a difficult balancing act, aiming to support economic growth while carefully managing the yuan's exchange rate.
It really speaks to the complex interplay between domestic economic policies and global currency markets.
Absolutely. The yuan's performance is something to keep an eye on in 2025. It could be a key indicator of the health of the Chinese economy and its influence on global trade. So as we transition into looking ahead, a question on many investors' minds is, will the market's incredible run continue, or are we headed for a correction?
That's the million-dollar question, isn't it? And MarketWatch has an article that directly addresses those concerns, even suggesting a potential correction of 10 to 15% might be in the cards.
Yeah, the article quotes strategist Jim Paulson from the Luthold Group, who suggests that while a full-blown recession might be unlikely in 2025, a significant slowdown in GDP growth could trigger a wave of fear that impacts stock prices.
Okay, that's a sobering thought, especially after the record highs we've seen this year. What's driving his analysis?
Well, he points to several indicators like the Citi Economic Surprise Index and the U.S. Financial Conditions Index. These suggest a possible weakening of economic momentum, which could catch investors off guard.
So are we seeing a disconnect between the current market exuberance and the underlying economic reality?
That's the key question. On one hand, we have this remarkable rally fueled by AI, a resurgence in crypto, and a relatively healthy U.S. economy. But on the other hand, there are whispers of a potential slowdown, rising interest rates, and the ever-present geopolitical uncertainties.
MarketWatch also mentions that the S&P 500 is trading at a price-to-earnings ratio above its 10-year average. Does that suggest the market might be overvalued?
It's certainly a point of debate. Some argue that the current valuation is justified by the strong performance of high-growth tech companies within the index. Others, however, worry that this makes the market more susceptible to a correction, especially if earnings growth falls short of expectations.
And then there's the historical parallel. The Wall Street Journal draws in their article, stocks on pace for best 2 years in a quarter century. They note that the S&P 500 is on track for its best 2-year performance since the late 1990s.
Ah, yes, the ghost of the dot-com bubble. That historical context is certainly giving some investors pause.
Yeah, it's like a cautionary tale from the history books.
Yeah.
But the article also acknowledges that there are reasons to be optimistic about the market's prospects.
Absolutely. The U.S. economy remains relatively strong. The Fed has initiated interest rate cuts, and we're seeing continued investment in infrastructure and other growth-driving areas.
So it seems we're entering 2025 with a mix of optimism and caution. It's all about whether these positive forces can outweigh the potential headwinds.
Precisely. And as we all know, the market can be fickle and unpredictable. We need to factor in corporate earnings growth, the Fed's future policy decisions, and of course the wild card of geopolitical events.
Speaking of geopolitical events, we can't ignore the potential impact of Trump's return to the White House.
Yes, the Wall Street Journal highlights this very point. While his victory has sparked optimism in some sectors, his proposed policies, particularly those related to tariffs, could create inflationary pressures and potentially disrupt global trade.
So it seems like 2025 is shaping up to be a year of potential contradictions. Economic strength versus slowdown fears, market exuberance versus valuation concerns, and political optimism versus policy uncertainties. It's shaping up to be quite a roller coaster.
Indeed. As investors, we need to stay informed, be prepared for volatility, and avoid getting swept up in the hype or the fear.
That's great advice. This is just a snapshot of the forces at play, of course. It's crucial to do your own research and seek advice from financial professionals before making any investment decisions. But now, let's circle back to Bloomberg and another interesting development, one that highlights how China is navigating these global economic currents.
You're referring to their report on the Chinese yuan, correct? It's interesting how they noted China's offshore yuan fell to its lowest level against the U.S. dollar since 2022 in thin trading.
Yes, especially given the strength we've seen in the Hong Kong dollar. The yuan's performance this year has been puzzling.
You're right. Despite China's economic recovery and their stimulus measures, the yuan has been under pressure. It seems the People's Bank of China is in a tricky position.
Bloomberg even mentioned that they might be holding off on a reserve requirement ratio, cut a move they previously hinted at to try and stabilize the yuan. They want to support growth, but also need to manage the exchange rate carefully.
It's a delicate balancing act, for sure, and it really highlights the complex interplay between domestic economic policies and global currency markets.
The yuan's performance is definitely something to keep a close eye on in 2025. It could be a key signal for the health of the Chinese economy and its impact on global trade.
Agreed. It'll be interesting to see how they navigate these waters in the coming year.
Wow. It feels like we've journeyed through the entire financial world today, uncovering all these hidden trends and potential risks.
It has been quite a ride.
We started with the AI boom and its impact on everything from those chip makers to Japanese cable companies.
Right, and then we jumped into that unpredictable world of crypto, witnessing Bitcoin's surge fueled by regulatory changes and that unexpected Trump effect.
Oh yeah, we even delved into the intricacies of the yen carry trade and its dramatic unwinding, reminding us that global markets are more interconnected than ever before.
And of course, who could forget those looming questions surrounding the Trump trade and its potential impact on government bonds, as investors grapple with the uncertainty of his economic policies.
Absolutely, and we also took a close look at the Fed's cautious approach to interest rates and how their every move is now under intense scrutiny, capable of sending those ripples through the markets.
We did go a bit beyond the headlines too, right? Uncovering concerns about potential market dislocations in the U.S. Treasury market, the surprising strength of the Hong Kong dollar, and of course Indonesia's costly gamble on biofuels.
And we wrapped up our exploration with a closer look at MicroStrategy's bold bet on Bitcoin, a testament to the enduring allure of crypto and the ongoing balancing act of the Chinese yuan as it navigates those global currency markets.
It's been quite a year, filled with unexpected twists and turns. And as we head into 2025, the question remains, will the current market momentum continue? Or are we on the brink of a slowdown, as some analysts suggest?
Only time will tell. But one thing is for certain, understanding these key market movers and the forces driving them will be crucial for navigating the year ahead.
Absolutely, knowledge is power, especially in the ever-changing world of finance.
Well, on that note, we'll be back tomorrow morning with new headlines from the major financial magazines. Until then, Happy New Year, everyone.
Happy New Year.